Part 3 of the required. A. Calculate the amount of pay as you earn that will be reflected on Rashid's payslip for April 2018. I don't think I mentioned it earlier, but please remember, guys, all questions, you always start it at the top of a new page. Label it nice and clear. Those things matter. Accountants, the whole point of being an accountant is being able to present things, information in a way. So it's all part of the process. Part 3. So Rashid Siubi turned 65 on the 19th of October, and they give us this information from 2019, and they asked us to do it for April. Okay, so let's just start at the top and go for it. So we start with the salary. Remember now, guys. Let me actually just quickly put some headings down. Description, calc, explanation. There's no column for CDT now because it is an employee tax calculation. We're basically doing it from the employer's perspective. So what does the employer know? The employer knows what the employer pays this person as remuneration. Employee's tax, I'm just going to write here, pay issue is on remuneration. It's actually on the balance of remuneration. So remuneration minus some expenses. So everything we have to include here has to be remuneration or allowed in terms of the fourth schedule. So the first thing is he's got a salary of 75,000 rands. I'm doing it on a per month basis. You can do it per year as well if you want, as long as it works out the same in the end. Okay, it's your option. I like to use it as the information is presented here. 75,000 rands. He has to contribute, so that's section 11F. He can claim that as a deduction still in terms of for when calculating the balance of remuneration. But there's also fringe benefit in here. That's the first thing. So we do all of the inclusions first, as always. So fringe benefit. Fund contribution. Salary of 75,000. 4% of that. Okay. 5,000 per month to Discovery, pension fund paid him. That's it. Okay, so that's the only remuneration I can see there. So 78,000 rands. So this is the total remuneration. Now we have our section 11F amount, deduction that you can claim. The actual contribution to section 11F is by the taxpayer and by the employer. You could also say fringe benefit, and that's that 3,000 we see over there. How much does he need to contribute? 8% of his salary. Okay, so the total contribution for 1 month is 9,000 rands. Now, the deduction is limited to the lesser of 350,000. That's for a year, but we're looking at it on a per month basis at the moment, remember? So how much would that then be per month? 29,167 or 27.5% times. Now usually we say the greater of remuneration or taxable income including CGT, but we don't do it here because the employer is doing this calculation and the employer only knows what remuneration is. So the remuneration was 78,000 rands. So the answer over here is 21,450. So right. And we don't have the third limit here that you usually also have. Don't take that into account for employees tax. So which is the lesser of these two amounts, the 21,450? You have to say it. The limit or the lesser, whichever one you want, is 21,450. So you're concluding, you're showing your examiner you know what you're doing there. Then you have to tell your examiner how much of that can you deduct. So thus, the full actual contribution, or you can just say actual contribution, may be deducted, or can claim the full deduction, or can claim actual. But you have to conclude on that in some form. Show your examiner you know what is happening. Okay, that gives us 69,000 rands. And that is an important figure for us. This is called the balance of remuneration. And that is what we calculate our employees' tax on. Remember, that is for 1 month. Our tax tables are set out to calculate tax for a year. So we have to annualize. That's 69,000. So we're saying in April. In April, we only, remember, this happens in April, this calculation. So in April, the employer only knows what they're paying in April. So they assume, it's basically an assumption that we make, that that's what it's going to be for the entire year. 828,000 rands. Now you go to your tax per tables. Now guys, here you have to use the correct tax tables. I'm using, in this example, like we said, I used the ones I've provided for you, but in the exam you use whatever is provided to you there. So your tax table here. Right. Everybody knows how to calculate tax per tax tables. So I'm just filling it in. This employee now is important. The following to remember, this employee was 65. So it gets the primary and secondary rebate. The primary and secondary rebate, again guys, you must use the correct ones. I'm going to just use the ones I provided for you here. Principal is important. Principal. In an exam, obviously you have to use the correct amount, but you have to use what is given to you. Don't memorize it. Use what is provided to you. Or use the latest SACA student handbook. Right. Section 6A can be claimed if the employer made a contribution or if the employee informed the employer of that. They tell you specifically in this question that he repays it, and he did not inform them of it. Right. So, did not inform employer. So you can't claim it. Section 6B, can you claim that? Yes, only if the employee is 65 or older. Then you can claim that portion where we go medical aid contribution less 3 times section 6A, and that amount times 33.3%. You can do that. But you need to know what the medical aid contribution was. And because you didn't inform the employer, that is also relevant for section 6B. So no section 6B. That's just a little bit of quick recap for you. Okay, so 235,300, that is the tax for the year. It's tax expected for a year. So thus for April is the 235,300 divided by 12. 19,608. Okay. Part B. Calculate Rashid's tax liability. You must assume the following. His taxable income amounts to 828 and the tax per tables is 256,521, and this is excluding lump sums. You must assume that the pay as you earn that you calculated in part 3A was correct, and the total pay as you earn in respect of the pension annuity received was 85,000 rands. The commission indicated that the pay as you earn on the lump sum was 436,500. Okay, nice. So this is what the calculations that we have to do. This is how it usually looks. We go taxable income. Right, we do all of the things, taxable income, and this is always excluding lump sums. We do our calculation, taxable income. Same as what, right, we usually do. Then we go tax per tables. Then we do primary plus secondary plus tertiary rebates, if there is. Okay. Then what do? We then say plus tax on lump sums. And very important, I want you guys to see, You have to do that before you do section 6A and section 6B, the tax on lump sums. Okay, so if we just use this structure I've got so far, so that will give us up to there. Then from that, we say less our prepaid taxes. Right, and we did take into account our employees' tax and so forth. Now, I want you to see, first of all, this question already says to us, the taxable income is 828. And it says, assume that the tax per the tax tables has been correctly calculated as 256,521. Okay, that's important. So you can see how to do it. Then you go and get the primary and the secondary rebate. Whatever those amounts are, guys, I'm not even going to write it down now. It's the same as what we just saw over here in my question, but use the correct ones. Right, then we have to calculate the tax on the lump sums. It's going to have to go next. So, tax on lump sums. How do we do our tax on lump sums? We say lump sums received. I like to split mine up into current year and prior year. Okay, and just for interest of time, I'm going to do it a little bit shorter now. Then we say less transfers to other funds that you've done in the current year and that you've done in the prior year, and then you say less contributions disallowed. And this is for the you've taken into account in the current year and taken into account in the prior year. Now, the first thing I want you to see is all the prior year amounts are out because this person has not received a lump sum in the past. If you go back to the information. This is the first lump sum of any kind. Now, again, I'm just reminding you, especially if you haven't looked at it in a while, this does not mean that when you look at things like these past contributions disallowed, that I'm saying that should be here in the prior year. That's not where it belongs. It belongs in the current year. The reason for that is, guys, remember what I'm saying here. The prior year is this calculation that we performed. So if I take out all the prior year things like this calculation that we performed in the prior year, you repeat that calculation. So you could even do it separately. Right, and that's for those hypothetical lump sums. But we don't have, and taxes, we don't have that. So it's 2.80 received. Right, they then say, 120,000 was disallowed. And somewhere, I'll show you it, yes, he transferred 900,000. Right, that's taxable income. And we then go to the tax per tables. Remember the concept I'm discussing here now. Again, these tables not necessarily correct, but you need to remember which tax table to use, either the withdrawal tax table or the retirement and severance benefits tax table. Now, in this question, they told you that the retirement age was 60, and we know he's already 65. He's 65 years old, and they tell you the retirement age somewhere here is 60. So he uses a retirement table. Okay, so tax per, I'm going to just say a retirement table. Right, and whatever that amount is, 393,300. Now that 393,300, so remember we've just been doing it, I'm just been doing it roughly here because you guys don't have the proper solution, but that 393,300 now goes into my taxable income there. The section 6 over here, 6A, as you must go and use the correct 6A figures, guys. Again, in mine, I've just used my own, which I've said is 300 rands per person, for the taxpayer and the first dependent. It's the same concept, works exactly the same, the concept, it's just the figure is actually different. And we know in this case there's 2 people, so times 12 gives us 7,200. Then we have the section 6b, so let me just clean up here a little bit, give us some more space. Section 6b, you do your medical aid contributions by the taxpayer. They told us it was 5,000 rands a month. He also incurred 50,000 rands. Right, so 5,000 rands a month times 12, 60,000 rands. From the medical aid contributions, when we do section 6b, you say less 3 times section 6a. Why 3 times, guys? Because this person is 65 or older. Sorry, there's section 6a, which should be a deduction. Sorry. So 3 times that amount, 21,600. Right, deduct that, gives you 38,400. Now already this amount over here, you can multiply by 33.3%. So 12,787. Then you have your qualifying medical expenses, so all those that you incurred, qualifying ones which are not covered by the medical aid. In this case, there was that back operation of 50,000. You multiply that by 33.3% as well. Right, 16,650, and this total over here is the total that you get for section 6b. You might do it in slightly different variations. We add these 2 up and then multiply. Right, but just remember the concept here is that it's basically separable in that way. And this is the amount for pay as you earn. If you're 65 or older and your employer knows about your medical aid contributions, they can still take that amount into account when calculating your pay as you earn. Just not shown here like that. Right, so now guys, we add up everything, all of our, sorry, my column is a little bit skew here. We add up everything. I'm just going to, whatever that total is, and from that we say less our prepaid taxes. Now here we have to think of all of the places that have done prepaid, that would have withheld tax. So I'm going to show you, remember now. So the first one is SEPA. SEPA is the first taxpayer to withheld tax. Or the employer, sorry. The second one is the SEPA pension fund. And the SEPA pension fund has 2 things, lump sum and an annuity. Right. So, the first one is SEPA. SEPA is that 19608 that we saw, the 19608, and this is in the first part, right? So I'm just going to quickly just show you over here. So SEPA 19608, and it was only for 8 months. Remember, he was only employed for 8 months. So that gives us the 156,867. Then we have the SEPA pension fund, which paid us a lump sum and an annuity, and both of those amounts are given to us here, the pension annuity and the lump sum. So you will take that into account. So if I just take you to the solution, guys, here you can see it just gets taken into account as that. And that's it. Hope you enjoyed the question. Hope you did well. If you have identified any areas where you need to go back and revise, please do so. Good luck, guys.